10,000 rupees a month builds 5 crore rupees. Most people don't believe this. They think wealth requires luck, or a massive inheritance, or a high risk gamble. They are wrong. It requires a system. A system so incredibly boring, most people quit before it works. They want the adrenaline of day trading, the flash of luxury. But true wealth is quiet. It is built in the shadows, away from the noise. Let's look at the math. If you invest 10,000 rupees every month and do nothing else, you will fail to reach the peak. Why? Because inflation eats your purchasing power. And your income will grow over time. So your investment must grow too. This is where the 3-step system begins. Step 1. The sovereign automation engine. Do not trust your willpower. Human emotions are volatile. When the market crashes, you will feel fear. When the market skyrockets, you will feel greed. To win, you must remove yourself from the equation. Set up an automatic mandate. The day your income hits your account, a fraction must vanish directly into broad market productive equities. Before you can touch it, before you can buy that new phone or pay for that expensive dinner, you must treat this money as gone. It is no longer yours. It belongs to your future self. This is Seneca's voluntary discomfort applied to modern finance. You live on less today to own your time tomorrow. Think of it as a quiet tax, a tax you pay to your own freedom. The loud debtor buys a luxury car on leverage. They look rich but own nothing. The boring investor buys productive assets in silence. They look average but own their life. Step 2. The 10% step-up rule. A flat 10,000 rupees a month is a starting point. But you are ambitious. Your income will rise. Every year, you must increase your monthly investment by just 10%. In year 2, you invest 11,000. In year 3, 12,100. It sounds small. It feels insignificant. But look at the compounding curve. At a standard 13% annual return, without the step up, you end up with roughly 1.9 crore. With the 10% step up, that number explodes. It crosses 5.1 crore. You didn't need a massive salary jump. You just needed a disciplined, incremental increase. This is the math of leverage. Small, consistent inputs compounding over decades. Most people underestimate what they can do in 25 years. They overcommit in year 1, get exhausted, and quit. The secret is the slow ramp, letting your lifestyle creep downward while your asset base creeps upward. Step 3. The practice of inaction. This is the hardest part. The modern world is designed to steal your attention. Brokers want you to trade. News channels want you to panic. Social media wants you to consume. They profit from your activity. You profit from your inactivity. When the market drops 20%, do not look at your portfolio. Do not check the daily charts. The Stoics called this the dichotomy of control. You cannot control the global economy. You cannot control corporate earnings. But you can control your behavior. The best investors are those who forget they have accounts. They buy and they walk away. They let time do the heavy lifting. 25 years is 9,000 days. Most of those days will be boring. Nothing will seem to happen. The first 10 years will feel like a crawl. But then, the curve bends upward. The interest earns interest. The momentum becomes unstoppable. You are no longer working for money. Money is working for you. This is how you build an estate that lasts generations. Not by chasing the next hot trend, but by mastering the system. The next secret is even darker. We will reveal how the financial industry actively tries to stop you from doing this. Follow for part 2. Because when you automate the boredom,